Hello everybody, I'm John. This is JP Strategic Investments, and today we're going to talk about Uber stock and whether or not I think that it's a buy now that it's pretty much back to right where it started before the pandemic, right around the $40 mark. So we're going to take a look at the charts, take a look at some technical analysis. We'll get into the valuation, and we'll talk about their most recent earnings report and some of the things that were said on the call that are pretty interesting. And then we'll get into, obviously, whether or not I'm going to be buying Uber stock and at what points I might do that. So let's get into it. The first thing that I want to take a look at here is the chart. So what we're looking at here is the weekly chart. Right, so every one of these candles represents 1 week. And if you don't know how to read candlestick charts already, definitely check out one of the other videos on my channel. I'll put a link in the info cards above in this video here. Candlestick charts are way better. They give you way more information than you normally get from just a standard line chart that you would look at for a stock. There's a ton of more things you can do, a lot more information. They're just all around a better way to analyze a stock chart. So I would definitely recommend that video. Now, getting into this chart, as I said before, Uber's stock is pretty much right where it started right before the pandemic. So if you look over here, this is early February. This is right before kind of the lockdown started. Remember, the lockdown started in March. And then we kind of have this obviously dive off here all the way down. We got down below even $14 for a second there. For those of you early on watching the channel, you may remember I was buying down there. I started a pretty big position down there, buying some call options, and did pretty well. But then I sold out around the $46, $47 level. I thought it was a little overvalued, especially for where we were currently with the pandemic, not quite out of it yet. So I had sold all of my position back then, but now that it's kind of right back to where it started before the pandemic and now seeing kind of where their business is right now, this is why I'm really thinking it might be a buying opportunity. So the first thing that I want to look at here is the chart. Again, it's sitting right back there, and we have actually a pretty strong support level here at this $40 level. It's right around where it IPO'd. Again, this was where its high before the pandemic was. And if we look at the daily chart, if we make each of these candles 1 day, we're seeing some pretty, we're seeing some support already kind of start here. We saw it bounce here, it bounced again. So we're seeing some support kind of start there around the $40 level there, and we definitely have a lot of support here in the mid to high 30s. So if it drops a little more, definitely from a technical analysis standpoint would be in a buying zone. Now let's take a look at the earnings report, the Q2 earnings report, and talk about some of the things that I saw in here and my thoughts on those. So the first thing that I want to look at here is the gross booking. So this is kind of the overall numbers broken down by segment. Really quickly, for those of you that have kind of looked at Uber before, you might be familiar with the rides and eats segment that they used to break it down. Now, in the last couple of quarters, they've kind of combined some of their smaller segments. So now they're doing grocery delivery and things like that. All of that is kind of combined with eats into delivery. So that's what we have here. And then as far as some of their other kind of car segments, Uber Pool, things like that, all of that is combined into mobility. And then we still have kind of the regular freight segment. So that's how they do it now when we kind of look back at other years. So 2019, we had rides and eats. Just wanted to kind of let you guys know that so that we can you can follow along when I'm comparing these. So first thing that I want to look at here, first of all, they're just crushing it, absolutely crushing it when it comes to delivery. So when we're talking about eats, when we're talking about grocery delivery, things like that, you can see we're at 12.9 billion. And just 1 year ago, and this was kind of in the heart of the pandemic. Remember, this is Q2, so this is April, May, June. The lockdown started in March of 2020. April, May, June was almost all during kind of the heart of those lockdowns. Really, when the ride segment was really suffering, you can see it was down to only 3 billion. The eat segment was just killing it, right? And now we're kind of back to a point where a lot of people are going to restaurants, a lot of people are going out to eat. Things have, pretty much opened back up a lot. We've got a lot of people that have gotten vaccinated, And Uber has almost doubled that number from what they did in the heart of those lockdowns, in the heart of the pandemic. So that to me is really impressive, that they're able to continue to maintain a huge rate of growth even after a lot of people are kind of going back to their normal, going out to eat. I would have thought not as many people would still be ordering Uber Eats, ordering out to eat, but basically they're getting double the amount of bookings that they were kind of in the heart of those lockdowns. So to me, that's really impressive there. The next thing that I want to take a look at is the mobility segment. And this I want to compare to what it was pre-pandemic. So what I'm going to look at here is the fourth quarter of 2019. So that is October, November, December 2019, right before the pandemic started, right before we got those lockdowns in Q1 of 2020. So before that, they had 13.5 billion. They did 13.5 billion in gross bookings. Remember, all of these numbers are in millions here. And that compared to what they just did in the second quarter of 2021, they only did 8.6 billion. So definitely not back to where they were before the pandemic, but you can see in relation to where it was kind of right in the heart of that lockdown there in 2020, only 3 billion, they've almost tripled that. So up almost 200% from where that was. So definitely on the right trajectory, but still not quite back up to where they were before. We did see in the guidance for Q3 and for Q4, they definitely expect to get that back up to pretty much where it was by Q4. So that's comforting to see. Again, not quite where it was, but definitely picking up some steam there. And as far as the freight segment, that is also showing some decent growth as well. 60% there year over year compared to 2020. And it was actually right around the same levels in the 200 million or so range before the pandemic as well. So nice to see that kind of regaining that growth there, and that should continue to grow nicely as well. So just looking at those numbers, they look pretty good. Definitely Eats or the delivery segment, really impressive there. Now what I want to take a look at here is the Ebitda. So mobility, remember Uber's Eats segment, Uber's delivery segment is not yet profitable, right? Their ride segment is, remember, the Eats segment is kind of a newer segment for Uber when they originally started out, just rides like Lyft, right? And then they added the Eats segment. And the Eats segment and the delivery segment now is, it has been going through kind of that initial period that the ride segment first went through, where everyone's fighting for market share and they're not caring about profitability, and then they slowly moved into profitability, right? Well, the delivery segment, along with that Eats and grocery delivery, that's kind of right in the tail portion of kind of that market share battle segment, right? You can see in 2020, they in Q2 of 2020, they lost about 232 million. Remember, anything in parentheses is a loss. They almost cut that loss in half in this last quarter in Q2. And so they're right on the edge of profitability. I think they said in the earnings call, all of their, or a lot of their kind of overseas segments, their international segments, not in the US, they're really, really close to profitability. They're literally like break even. The US is lagging a little bit behind because there's a lot more competition in the US right now, but they're really getting close to that profitability. And in fact, on an Ebitda basis, so kind of before tax, depreciation, and amortization, kind of before some of the extra fees that basically companies have to pay on their earnings, they do expect to be profitable on an entire business basis in Q4. So that's really exciting. Definitely good to hear that they still kind of have that guidance even after what we've gone through. So that should be really exciting there. Now, a couple more things that I do want to talk about that I heard on the earnings call. One of them, as far as their advertising segment. So Uber Eats now allows restaurants to advertise on their platform. And originally, they were looking at, I think for 2021, an estimate of around 100 million in ad revenue from Uber Eats, Well, now that they've seen the first 2 quarters, they actually expect triple that. They expect to be getting about 300 million total in revenue just from ad revenue from restaurants advertising on Uber Eats. So that is definitely turning into a very significant revenue stream for them, and it's looking like it's growing a lot faster than they expected. So that is definitely a big thing for me. The next thing that was impressive was where it used to be that rides was kind of a good funnel to get people into Uber Eats, right? A lot of the new people ordering food on Uber Eats were already current riders, right? It was a good marketing funnel for them. Now that Eats and food delivery has become such a large part of their business, it's actually kind of working in the other direction as well now. And so one of the things they mentioned on the earnings call is 40% of new riders in the UK and 20% of new riders in the US are current delivery customers, current Uber Eats or Uber Grocery, things like that. And they're now getting brought into the ride segment because of their initial orders with Uber Eats, right? And so now both of them are working to funnel customers to the other, right? Now it's not just rides that's funneling customers to Eats, but also Eats that's funneling customers to rides. So now you have 2 funnels bringing in customers, and you're able to kind of double that marketing funnel that you had before. So that was something that was really impressive to me as well. And finally, the last thing that I want to mention here is Uber Pass. So if you haven't seen already, Uber kind of released this Uber Pass, which is basically almost like a subscription model where you pay a monthly fee and you get certain discounts on rides and Eats and things like that, right? And they've actually seen in the 6 months that they've kind of started it, they've seen an over, I think it was 96% retention rate. So people that subscribed that first month, right? Over the 6 months that they've had the subscription available, 96% of people that started that subscription have stayed with that subscription, and they've seen that Uber Pass actually increase. They can kind of look at the customers that are using the pass and versus the customers that aren't. That Uber Pass is really driving a lot of that growth, especially in Eats frequency, the frequency of orders, and even rides. So that Uber Pass is really working well for them to kind of keep customers in there, increase the frequency of orders and the frequency of rides. And it's even increased kind of the basket size when you look at overall what people are ordering for food and grocery delivery and things like that. So that Uber Pass is driving a lot of growth there. So that's the last thing I want to mention there. So with all of that said, will I start buying Uber stock? Well, not quite yet, but what I am going to start doing either tomorrow or early next week is I will start to sell some Uber puts, and I'll probably sell them around the $35 to $37 level, and I'll sell them probably expiring each month. So I'll go a month out, sell a put around 35 to 37, those strikes, and based on what I've been looking at, I'll probably be making from those puts between $30 to $50 a month, and that'll just be income that's coming in. And if Uber stock kind of stays where it is or starts to go back up, then I'll just collect the premium on those puts. And if it does go down to kind of that $37 level, that $35 level, then I'm more than willing to buy the shares at that level. I think at that level, there's enough support from a technical standpoint, and the valuation will be low enough to where I think it's even undervalued from a fundamental standpoint, that I will be willing to actually go and buy those shares. So that's my plan for Uber right now. That's kind of my thoughts on the technicals of the stock and where the fundamentals are of the company. If you have any questions or comments, definitely leave those in the comments below. And other than that, I will see you guys next time, and have a great day.